Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 27th, 2024. And the question we're asking today is, should we be bullish again? All right. We've got a few green candles on the hourly time frame, couple on the 4-hourly time frame, and people are convinced we're back on, meaning the race to 100K is back on, the dump is over, the consolidation is over, the retracement is over. Is that true? Should we be bullish again? We're going to look at that in detail. If that sounds interesting to you, then watch until the very end. Let's get into it. Looking at Bitcoin on the hourly time frame. Actually, let's zoom out for a second. Let's look at it on the daily. All right. So we're looking at it on the daily time frame. What you see here is actually, I thought I fixed that. No, that's fine. What you see here is in white is my map, my plan of action for what I think is going to happen. So obviously, I'm not expecting anything much from this. But what is this? What are we looking at here on the smaller time frames? Obviously, on the daily time frame, this daily candle is strong, okay? And you would say it is an engulfing candle, meaning it completely takes out this doji candle, but that doesn't tell us much. Really, a proper engulfing candle would take this candle out, okay? Then it would be a different story. But up until now, it's a green candle, and the previous candle was red, doji, meaning, doji means indecision. That's what it means. Indecision, meaning there's a little bullishness, a little bearishness. The body of the candle is kind of in the middle. There's a wick to the up and downside, right? There's nothing really substantive. There's nothing really decisive about it, okay? So that's on the daily time frame. Let's zoom down into the 4-hourly time frame. Looking at the 4-hourly time frame, again, a lot of people think this was boom, boom, okay? And we talked about this yesterday. Why on the higher time frames is that very unlikely? Because then, if let's say this moves and the correction is over, that means the correction was that. What is that even? Okay, that is very unlikely. That would be a running flat of sorts, right? Where this would be the final wave. And remember, in every correction, doesn't matter if it's a ABC correction, a WXY correction, and a WXYXZ correction, the final wave is always impulsive. Okay, that looks like an impulsive wave. You could argue that it's an impulsive wave, but it's not a proper impulsive wave. So there's a lot of things going against the idea, the trading thesis, that this is a contiguous corrective pattern. Also, there is no mathematical relationship between this and this. If you pull your Fibonacci from the top of this right here to the bottom, you can see that right here, this level has already eclipsed the 1618 Fibonacci retracement level. So this mathematically means there's no contiguous relationship between this and this, okay? So that's like a really wonky way to say it's very unlikely that you're looking at a correction that started on the 14th of November, 13th of November, and then ended today, and then we continue. No. What's more likely than not is what we've been saying, that what you're seeing here is the following. You're seeing simply a rounded top that indicated a turn of impulse, a turn of momentum from up until down, okay? And right now, what you're getting is this right here. You can see it better on the smaller time frame. Let's jump down now into the hourly time frame and look at it. So what you're seeing is this rounded top, which essentially was a head and shoulders bearish reversal pattern, which broke down, is now just retesting failed support as new resistance. Okay, and so again, when you're looking at these charts, it's really important to remember the fundamentals. The fundamentals, they clarify, they make things quite simple. A lot of times it's quite simple. A few principles applied here and applied there bring great clarity to your charts. So if you're looking at this as a head and shoulders bearish reversal pattern that broke down on Monday, this is nothing but a retest of that failed support as new resistance, which we know has to happen before continuation to the downside. Okay, this failed support lasted from the 20th to the 25th, so that's 5 days of support, right? Price tried, didn't make it, lost, now retest. Don't be surprised if you see a little consolidation over here at the base of this inverse, or of this head and shoulders bearish reversal pattern before an actual move down. Okay, and that's what the price action is saying. Furthermore, if you take your Fibonacci retracement tool from the top of this move to the downside to this point right here, and okay, this is a little bit of, you may need some deeper understanding as to how to determine what an orthodox low is. An orthodox low in technical analysis, specifically in Elliott wave parlance, means the low that you measure the move from. Okay, you know, there's, so the price, the lowest price on this chart right now in this move is this, but you wouldn't measure that as your low. Reason being, once you get down here, you clearly start to correct, and these corrections do make a lower low, but they're part and parcel of the correct. Like this impulse right here, this mini impulse stopped here, and then from here you see an accumulation of sorts. Even though it's down into the right, it's still an accumulation, and so you start counting, you start measuring from here. That's called an orthodox low, and that, you know, that takes a bit of skill, I think, to develop a knack for how you count those and how you can determine those. Otherwise, that's where I'm counting my orthodox low from, and if I do indeed, it shows that my phi ratio, my 0.618 of this move, is right here where we're at. And the phi ratio is what? It's the golden mean. Typically, it serves as resistance when you're below it, support when you're above it. So right now, Bitcoin is under resistance of the phi ratio of the preceding move down on the hourly time frame. That move down specifically was what we incurred on the 25th, on Monday. So all that to say is this: very likely that Bitcoin stall around this level of 96.3. Okay, I don't expect a big move above here. And once we're at 96.3, this would be a great entry point for a short position, actually, because you're in a move that's, with a high degree of probability, proven to be bearish with a change in trend, and you breakout, retest, breakout. That's the real breakout. Remember, every breakout has that anatomy. Breakout or breakdown, retest, and then the real breakout or breakdown. Okay, so that's what I'm seeing on the charts. As such, I don't think it's time to be bullish again. I think this is a bull trap, and for unsuspecting sort of traders, analysts that are overly eager, don't have a plan, don't know how to really buy a dip, people are buying here. They're going to be sorely mistaken when we lose complete momentum and this move hits them hard. And not only that, they're putting in more buy orders here, meaning there are more sell orders here. So that whole idea of cascading liquidations to the downside, you're just adding fuel to the fire for the subsequent move down, right? So that's what I'm seeing on Bitcoin charts. Looking now at the indicators, right? And that's how I think indicators should be used as an accessory, as a complement to your reads on the charts in the price action. This is showing us the same, right? On the hourly time frame, it looks like you're in overbought territory. You're completely overrun. You're kind of the move to the upside seems exhausted. On the 4 hourly time frame, you're near that area. This 4 hourly candle ends in about 2 hours, but you're basically in overbought territory on the 4 hourly. Daily is not yet crossed bullish, so it's still cross bearish. It's in oversold territory, but still crossed bearish. Okay. Man, that's pretty much all I would look at: hourly, 4 hourly, daily. But yeah, that's Bitcoin. So that we use the stochastic RSI indicator. I have two more indicators for you. Two more indicators. All right, let's go to Bitcoin dominance. Now, for those of you who watched the last episode, the episode before last, you'll know exactly what I'm going to say. You would be foolish to look at the Bitcoin dominance indicator and think that we're going to get a bullish move, like a proper, substantial, significant bullish move in the cryptocurrency market, specifically in altcoins. I see on crypto Twitter a chart, and I think crypto Twitter has one chart. Like somebody did the analysis and then everybody just copies it, and they draw this line right here, and they say, hey, look, Bitcoin dominance just broke a 4-month trend to the downside. Like, prepare for your bags to pump to Valhalla, okay? And that is, I'm not even joking. If you go on crypto Twitter, you will see this chart, and everybody's using the same chart, no originality, and nobody is bothering to zoom in. It's the one time I'm saying, hey, actually, zoom in. Zoom in. It's not what you think. They have it on the daily or the weekly, and, they're looking at it, and they're thinking, oh, that's a breakdown, and it's going to go lower. Well, is it, though? Because if you look more closely, and we've been looking at this for quite some time on this channel, this line is insignificant, actually. The actual support is this horizontal support that we're holding right now, that we've held here, and what you're seeing here is actually super bullish because you're seeing a falling wedge, okay? And you can look this pattern up. This is a simple bullish reversal pattern, right? It's called a falling wedge, where a consolidation happens, making higher lows and lower lows, yet the breakout is actually creating a stronger breakout than if it weren't down and to the right, okay? Do you see? And it's kind of what I talked about in Bitcoin, where this is your orthodox low, and from here you started your accumulation, and even though your accumulation is going up and down and up and down, and it's slanted, it's still an accumulation. The move ended here, right? It doesn't always have to be, these ranges of accumulation and distribution don't always have to be orthogonal. Sometimes they're slanted, sometimes they're in a wedge to the upside, to the downside, right? They look a lot of different ways. So that's what I'm seeing here, and you can see if you count, you can see A, big B, small a, small b, alpha, beta, 2 degrees of AB basing in a pivot. This is AB based theory that I refer to a lot in Elliott wave analysis, meaning the end of an accumulation and the resulting move, as evidenced by your stochastic RSI indicator, which is just crossing bullish now on the 4-hourly time frame, is a strong move up. And what did we say? we said that once Bitcoin dominance indicator comes down here, you'll want to sell, because this is a support level from which it has to go back up, right? So Bitcoin dominance comes to this line, it's a sell indicator. That's why I have this rectangle as red. And now the next buy indicator is when Bitcoin dominance returns. Let's zoom out for a second. So let's go on the daily. And guys, if you're getting value, please like, share, and subscribe. Consider buying me a coffee or subscribing to my new product, my new service, my portfolio consultation service, right, on Buy Me a Coffee. All right. So yeah, the next buy is when Bitcoin dominance comes back here and retests this resistance. That's when you buy back again in altcoins, not down here. This is literally where you sell. This is the opposite of what you should do. So looking at this Bitcoin dominance indicator and the stochastic RSI that's elucidating our read on Bitcoin dominance, it would be the worst time, right? Look, the daily on the Bitcoin dominance indicator is quite literally just crossing bullish. The KND lines that you see right there are crossing bullish. You do not want to buy any crypto right now. Right now is a sell. It's a perfect entry actually for a short. Quite literally the opposite of what you're seeing throughout crypto Twitter. I'm not going to waste time going through crypto Twitter. Go ahead and do it. You'll see they're all overly excited. But just goes to show you two things. One, people really want this move. Everybody's so tired of waiting. It's been a long time since the market's given us a proper move. Two, there's a lot of bad analysts, like shitty analysts that have public exposure, that are, you know, that have the echo chambers, that have sort of outreach. You know, they have big followings. So just be mindful of that. The best thing to do to arm yourself to figure out, you know, who you should take advice from is learn yourself so you can discriminate. Understand, you know, basic rudiments of technical analysis, rudiments of how to read a chart. And then you'll be like, oh, this guy's quite experienced. I don't have the experience he has. I'm going to listen to him. But you can't do that if you know nothing. So do your own research. It always comes back to do your own research. Don't just look at somebody's following or the P&L that they may have posted. People can get lucky in this market all the time and think they know what they're talking about. I promise you, there's a lot of terrible analysts. I mean, you don't have to get every call right. And no analyst gets every call right. I get shit wrong all the time. Those of you who have been subscribed to my channel know that. It's not about that. It's about the substance. It's about the quality of the analysis, how thorough it is. If you have the basic principles down, right? You can still put the basic principles together and come to a wrong conclusion. The market's tricky as hell, you know? So yeah, this is what I'm seeing. On the daily and the 4-hourly, you're crossed bullish and you're going to pump. If Bitcoin dominance is pumping, what's that telling you? That in the real world, in, you know, trading these assets, that either Bitcoin's about to dump or these altcoins are already dumping. So they're losing dominance to Bitcoin, okay? And I have a third and final indicator telling you that, you know, it is not yet time to be bullish. On the contrary, it's time, if you're so inclined, to get into a good short position. And, you know, that takes skill, and not everybody's comfortable with it. But if you are, now would be an opportune time. Looking at the US dollar currency index on a high time frame, you are at resistance. It's true. The US dollar currency index is ready to give big gains. And I've put this read in a long time ago. You have a massive range, like a massive range. This range that the Bitcoin dominance or Bitcoin, or sorry, the US dollar currency index is in lasts from the beginning of 2023. So January of 2023 until now, you've been going up and down, up and down, up and down. That's why you haven't gotten any real strong moves in Bitcoin or in crypto. I mean, Bitcoin's up year to date like 100% or something. I don't know. But it's like, that's nice, but it's not what we're used to in crypto. Why? It's because we've been going up and down and up and down and up and down for almost 2 years. Okay? And now we're at the resistance of this almost 2 year channel. Okay? And what's important now, let's zoom in for a second, is you've broken down, or you started to break down, you've put in an initial break of structure right here. So this is the uptrend of this sort of this channel, the last uptrend, it seems, of this channel, right? Every corrective pattern ends in an impulse. That's the final impulse of this larger almost 2 year channel. And this is your initial break of structure. Now, what do we know? Again, one of the fundamentals, principles of technical analysis, and it's highlighted, elucidated by Elliott wave analysis, is when you're going into correction, corrective patterns come in three. So it's A, B, C, W, X, Y, W, X, Y, X, Z, double tree, single tree. It doesn't matter. It's flavors of three. So here you have this initial break of structure. That's just one break. Expect a subsequent move up before the actual move down. So you go 1, 2, 3. That 2 has yet to happen, i.e., this US dollar currency index is going back up, right? The initial break of structure doesn't continue down here. We know this because we've seen it a million times. Any chart on any time frame, it's time frame agnostic. No breakdown happens like that. A breakdown always happens A, B, C, or again, W, X, Y, X, Z. You put in that Wyckoff distribution channel, right? That's again in a flavor of three or something like that. But it's up here that you buy. It's up here, somewhere up here, that you expect the declension in the US dollar currency index, which then yields the pump in Bitcoin, the pump in the rest of the cryptocurrency market. So for all that, again, I'll say, looking now at your indicators as an accessory, as a complement to your read, you can see on the 4-hourly time frame, you're in oversold territory, i.e., the momentum in this US dollar currency index is likely to go up. You can see a bit of a bullish candle forming right here. On the hourly time frame, it's the same thing, right? It's the same thing, guys. Again, this isn't for everybody. Technical analysis, reading charts and stuff like that, it takes a while. For those of you who are on my channel watching this stuff, understand that it's not popular for a reason, because it takes work. I'm not talking to you about, buying the fucking dip and stop being a pussy and, Bybit or Binance, sign up for this and that. Not that there's anything wrong with that, but I spend most of the time talking about charts, talking about things that put a lot of people to sleep and bore a lot of people because they're not interested in doing the work. They're not interested in looking at their charts. They just want signals. They just want, should I buy? Should I not? And if you're not bullish, you're kind of against Bitcoin. If you're not always bullish or you're not always bearish, like you have to be one or the other. Either you're crypto savvy, you're always bearish, or you're, Carl from the moon, you're always bullish, or somebody, you know what I mean? Like there is some sort of middle ground, and reading charts and going in and, making mistakes and trying to sift through the information and understanding when to buy, when to sell, all that stuff, it takes a lot of work and it's not for everyone. This is why this channel is not for everyone, and I'm not trying to make it for everyone. This is a passion of mine and I share it. But honestly, if I wanted to make a big YouTube channel that was about crypto, I'd probably just talk about fundamentals, keep the technicals to the side, and look at indicators, because you can sell those and you can affiliate with those and then tell people they're not bullish enough, and just do stuff like the playbook of, you know, the actual crypto influencer. I'm not a crypto influencer. I'm a technical analyst and a trader. So yeah, that's pretty much it. I would not buy now. If anything, I would sell. That's all I've got. If you got value, please like, share, and subscribe. Consider buying me a coffee at the pinned comment below, or subscribing to my crypto portfolio. I always forget the name for the service. My crypto portfolio consultation service also on Buy Me a Coffee. Take care. See you next time. Bye.
All is well.